So, hello. Hope everybody's having an awesome weekend. This is 50 pips rocking and rolling here, 30th 03 2014. I'm not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take. The fact you're listening to this means you've read to understand, you accept all the disclosure disclaimers on the blog, understanding that we're just performing some live technical analysis in a learning context for educational purposes only. So let's get going, guys. So what do we got shaping up for the week? Well, it should be an interesting one. Well, keep in mind again that we've had daylight saving time shift across the board, so in Europe too. And now, we'll start going into the week with some light data, CPI out of Europe, then we've got some GPB stuff on the wires with Carney speaking. Yellow's going to speak on Monday, but really it'll start to heat up on Tuesday when we've got basically final PMI, so the HSBC out of China and the RBA rate decision. So that's really going to be the first really interesting thing. Then we've got all those PMIs out of UK, Europe. We've got another bunch of data out of Australia and US, and then basically we're going into Thursday, which is the big day, because again we continue on all the PMIs, but then we've got the ECB press conference, what a lot of people have been waiting for, and then we're going to Friday. As usual, we have the little cherry on top of the cake when we've got our non-farm payrolls. Okay, so clearly there's a lot of event risk this week. So how's it going to shape up? Well, I think we'll look at futures and Forex, but since we talked about these things, I think first thing about what's going on Aussie. Now Aussie, we talked about this move. This is where on the daily chart we talked about the fact that it was trying to come back into this 200-day, and just jokingly, everybody, their hamster and their grandfather was looking to short the 200, right? And what we said is, again, when you get sharp reaction off these levels, they tend to move quickly. When market doesn't move away from these levels aggressively, usually it's not a good sign if you're trying to play those moves off it. And what we said is keep an eye on this, because we had the 90-91 level hold above here, so dangerously close to the 200, but daily closes above the 91s. We expected this to break, and on a move back above these 91.60s, we expected this to extend back into towards the 93 levels, right? So here a lot of people, again, are the most obvious thing people are going to be looking at is this the close of the daily. So probably bringing a lot of people trying to short this. I think keep in mind it's really all about the RBA here. I think the risk for the week is that if we do not get any comments out of the RBA saying, dangerously strong, etc., yada bada ying bada bang, whatever, the usual kind of rhetorics, basically this could easily try and break through the 93.30s, and we would expect the 95 level to attract. But equally caution, because if the RBA comes on the wires talking about it being dangerously strong, etc., we would not be surprised to see this trading back below that 200 very quickly, and then it's all going to be about this chop zone. So again, as we've been saying, we would expect this pretty much, for the following months to globally stay range bound, kind of 95, 88s, or even 93.90s, basically inside. We don't expect any huge move, at least for now, unless the things are clear also from the RBA level. But really, two things to keep an eye out this week: 200-day moving average broken above, so previous resistance now should act as support, and all about the RBA. If the RBA comes on trying to weaken the Aussie, we'd see a move, quick test of this, break below back into the 90s, no talk, then the grind higher continues. Then speaking of central banks, right, what's going on the euro? Well, basically euro, we had this move back down, and we talked about that low range for the week. We talked about the 37.10s, right? And if you look back here, I've got it on the daily, no surprise, we talked about this level. This is a very, very key point in the past, so we're very closely looking at this level. So going into the week, right, the big question is what's going to happen with Draghi and the ECB. Keep in mind that right here, as we're going into this level, right, we're in base support, right? We've got these two moving averages on the chart. This is the 200, oops, not what I wanted to do, 200 and the 100. So this is the whole first key support to hold the uptrend. Now keep in mind, if Draghi comes out talking about negative rates, God knows what, then we'd easily expect this to really try and let go and potentially move down all the way back down into those 135 levels, okay? But I don't expect, and I don't like to talk about fundamentals really, but I, don't really expect a complete reverse shift in policy. So I expect it to be choppy, but this level to hold, and for us to see try to test back towards the 138, 139. But basically going into the week with the ECB risk, and we're trading 137s, I think pretty much the risk is about 200 to the upside, so that means into 139s, and 200 to the downside, pretty much into 135s, 135.50s. And I think that unless we get, daily closes below this 200-day moving average, then it will really be very bearish. Or unless we get daily closes back above the 138.50, 139, then we think those 140s, 141s could come quick. As long as we stay inside that range we discussed, a lot of choppy action. So again, don't get fooled. Keep in mind it's all about the ECB, so it might get whippy, but that's pretty much what we're looking at. But here, in terms of a longer term trend here, we're into base support, right? What's going on K? Well, again, sorry, since we're talking a bit all over the place today, but again, it's similar to that Aussie. Everybody's going to be looking at this Kiwi, that daily reversal candle that was put in on Friday. Again, this was a key level. We were expecting this to come back into those 86.70s. Keep in mind, it's a massive zone, right? So clearly, keep an eye on this on the week. I would call this the bull bear line for the week, 86.75. Bullish above, bearish below. Daily closes above, we expect this to extend back into the 88.30s and try and take out those 88.30s. Daily closes below that 86.70s, then I would expect this to try and come down, and this previous resistance now should be support going on at the week. So if you want to look at it on this weekly, basically risk to the upside, risk to the downside, right? What else have we got here? So if we're looking at cable, what's going on cable? So cable, we talked about this move down, and we talked about the importance of the 165.00 into 164.50, and we said that was base support. As long as that held, we expected it to go back and test the 166.00, 166.20, which was the breakdown point, the all too familiar box we were trading for a long time, right? Remember, we're saying closes above or below is what guide us for the next move intra-week. So we had that close below, bam, back into support. Support is holding. Watch this into the week. As long as we hold and have daily closes above the 166, 166.20, then we expect these 167.50s to attract. But if we start getting daily closes back below, then we'd expect 164.50s to come relatively quickly. Keep in mind, inside this whole area to the downside, it could be very, very choppy. We need closes outside for the next big Momo move. At the moment, the market tried to break below, could not get any traction, and is back inside that zone. So it's really, if the bears want to keep pressure on, they need to get daily closes back below these 166s quick in the week. If not, we'd expect this to try and gravitate higher. What's going on the yen pairs? Again, yen, we moved right back into this pivotal zone. What we said, no change in this whole area. We said closes below, heavy closes above, bullish. So right now, as long as we hold this as support going into the week, we'd expect it to try and continue to move back. No change in outlook, move back into the 103s, 103.50 level. And again, this is the pivotal zone. The chart is the same. You can look back in the previous week outlooks. We discussed this in a bit more detail, but the chart's exactly the same. And speaking of yen, if you look at the Euro JPY, again, we talked about this zone, right? We talked about the fact that it was very, very choppy, not a lot of movement, but basically that we couldn't get any daily close outside this area. And as long as we didn't get a daily close outside this area, we remain mildly bullish, but still chop, chop, chop. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, about 11 days inside this zone, market failing to close outside, right? So as long as we're here, this is just chop, 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 chop. Daily close below, we'd expect 139.00s to come quick. Daily close above, we'd expect us to see a relatively quick move back up into those 143.70s, right? So this is the high end of the range. This is the low end of the range, but as long as we're stuck right here in this pivotal level, it's much to do about nothing. Just positioning here, we expect this because there's not a lot of interest here. The big players are at the extremes and they're just waiting for the moves here. But right now, it's still stuck at that pivotal level. We'll have to see how this plays out for the week. Going on to the future side, I mean, crude held the 50 back retracement. We talked about that 100 and that 200-day moving average. We said if the shorts wanted to keep pressure on, they needed to smack this down quick and hold this below. And they tried. You see, basically, we had 3 days in a row where the sellers were trying to cap this, and then they couldn't. We broke above. So right here, hold above the 100, hold above this 200. We're looking for this to try and grind higher back into the 105s. I think a lot of the shorts are still going to be trying to hold on to the fact that right here, we've held the 61.8 retracement. The way this is trading, we expect if this down move is strong, the way we look at the markets, if this is strong, we'd expect it not to be able to close back above the 100 and above the 200, and for the sellers to come in and smack it down from here. The fact that they haven't managed to do this, we expect the 61.8 retracements to break, and this is not a 50 back fib kind of zone we would be trading. So for us, we're still looking for this to grind higher, and if it fails, we expect it needs to fail higher than from a higher level than that 61.8. What's going on gold? Gold, we've had a retracement. Gold, we're talking about this stuck in 1400, 1350, 1300 range. So the three circles here to the right of our chart, that's basically the range, and we've moved all the way back down into low range. Now, we said this could be choppy. This is the 200-day moving average. It's closing below. If you look at the move from lows to highs, I think it's on the chart in the blog, the 50 back is getting bought here. Going into the week, this could be very choppy as the equity market still is looking for direction, but we'd expect this whole 1300 to 1250 zone to catch a bid, and we'd expect this to be trading back above that 200 very quickly. Close below the 1250, we would have to call this a range shift, and we would say basically daily close below 1250 and open up the room for a move back into the 1200. But unless we get that, we're still looking for this to try and repeatedly take stabs higher back towards the 1350, 1400. On the equity side, mixed picture, right? You know, pretty much NASDAQ is holding heavy. Still holds heavier. We've been talking about this all week. We're talking about if you're looking for intraday shorting opportunities, much rather get short NASDAQ than the ES, as the ES still looks fairly really unconcerned with all the weakness in the NASDAQ. It's still holding a bid, right? Even though it's had some moves down, but pretty much it's going nowhere quick. So right here, NASDAQ is still holding very heavy. So clearly it looks like NASDAQ's trying to lead. What we'd say is keep an eye here around these basically 3,500, 3,520s. We break below that early in the week, we would not be surprised to see moving right back down into the 3,410s. This whole support zone to the downside. Okay, we expect this to continue to trade heavy. Now, if it manages to hold a bid here going into the week early, then we'd expect it to try and move right back up. And basically, the base resistance to the upside is this whole zone into the 3660s, 3640s, right? This zone would extend. That's what we're looking at as upside resistance here. But clearly, NASDAQ is struggling and is holding much heavier than the ES. Again, still much heavier, but those are the zones we'd be looking at on the NASDAQ. If you're looking at the ES, right, we've talked about this area, right, basically 1900, 1850, 1800, right, and we said as long as we hold inside this area, it's pretty much to do about nothing, right? You see that every time we try and break below that whole 1850 zone, we keep on catching a bid, right? So it's trying to move lower, but it keeps on finding a bid, right? You see that, and it's right back hovering, trading 1849. So it's very difficult to make a call here because globally, this is pretty neutral, right? Neutral at highs. So the big question is, how are we going to resolve ourselves? Now, as long as we hold above the 1850, I'd expect us to go back into those 1860s, 1870s quite quickly, okay? And it's going to be very, very important for the bears to hold this move up if we get there and smack it down. If not, I would not be surprised for us to try and make a stab at those 1900s. Now, if we open the week heavy and we hold below those 1850s, as long as we hold below those 1850s, then we might see tests of the 1800s. But again, neutral sideways chop unless we close above 1900 or below the 1800. It's a very tricky call. I think there'll be a lot of people talking about the fact that it's neutral, trying to build a base to rip back higher, and it's got to fail higher. There are a lot of people talking about the fact that Dow, NASDAQ, ES, they're all non-confirming. Everybody's going to be looking at the NASDAQ. They're going to want to see the ES try to rally, but on NASDAQ weakness to then get short the ES, etc., etc. It's a tricky call. It's a tricky call. The fact is that ES, it looks like it's got an underlying bid tone, even though it feels weaker and weaker. It feels like for the first time we've got more and more, we really have some sellers in the market instead of just closing your eyes and buying. It's pretty much been a case of trying to get short intraday this week, so it does feel weaker. NASDAQ's just weak. That's just a fact. We'll have to keep an eye on those levels, but pretty much right here hovering at the 1850s. So I think it's an interesting week. It should be an interesting one. Keep in mind Monday's the last day of the month, tomorrow's the last day of the month, last day of the quarter. So let's see how this moves. Again, don't forget the main event risk really is coming out of the to start the week. First of all, RBA, then we've got the ECB, and then we've got non-farm payrolls at the end of the week. So let's see what happens. I hope it's a great week for everybody. Have an awesome one. I'll see you guys tomorrow for London Open. Have a great one. Take care. Thanks.